Are you worried about how the election result could affect your investments? Let's take a look at what past elections can tell us. You might be an active investor checking in on the market multiple times a day. Or you might be the set it and forget it type, investing in a 401k or IRA. No matter your investing style, if history is a guide, the weeks and days leading up to an election, you can expect bigger ups and downs than usual in the stock market. Historically, the S&P 500 has been more volatile around elections than at other times. Why is that? Well, the stock market hates uncertainty, and candidates' plans for future economic policies tend to be cloudy leading up to an election. In fact, investors' uncertainty around economic policy peaked this past May to its highest level since the 2008 financial crisis. The market's distaste for uncertainty could be why the S&P 500 has posted negative returns on average during election year Septembers and Octobers. That often causes investors to stash more money in cash than stocks, $100 billion more on average in the last 7 presidential election years. But here's the thing about elections, they eventually clear up uncertainty. That might explain why the S&P 500's average returns in Novembers and Decembers of election years have been positive regardless of the result. And it may also be why, in the calendar years after the last 7 elections, investors put on average $132 billion more in stocks than cash. Overall, the S&P 500 posted a positive return in 17 of the last 23 election years, with an average return of about 7%. So what does this mean for you and your money? Voices on both sides of the aisle tend to predict market disaster if the other party wins. But historically, it hasn't mattered much to stocks whether Democrats or Republicans control the White House. The S&P 500 has risen in about 2/3 of all calendar years under presidents of either party. If you're anxious about the possibility of a split Congress, you'd be pleased to know that the difference historically is almost nil. The S&P 500 has posted average gains of 10% under a unified government and 10.4% with a split Congress. Fact is, the stock market has tended to rise most of the time, regardless of election outcomes. So what should you do with your investments this election season? Probably nothing different from what you're already doing. Make sure you have a diversified portfolio, and once you've established an investment strategy, stick with it no matter the ups and downs of the election cycle.